Welcome back. Well, as we wrap up the week, we'll take a look at the Daily Technical Trading Journal, our new addition to just the data, where we examine on a technical analysis basis the different market activity. And the benefit for this is that we can come up with some interesting trading ideas along the way. Now, the way this works, we see the different various markets, Dow Jones Industrial Average on down, and we have here daily, 5-day, 30-day, and 90-day range. What the percentages indicate is where the market closed within its each respective range. So we see here the Dow Jones Industrial Average indicates on a daily range 68%. It means the Dow Jones Industrial Average closed 68% or a little bit more than halfway up of its daily range. Imagine a stock that has an average range or has a range between a low of $10 a share and a high of $20 a share. Well, a 68% range would indicate it closed around 17, almost 70% to the top. The 5-day range for the Dow Jones Industrial Average is 82%. The 30 and 90-day range is 97 and 98%. So we see on a long-term basis, the equity markets are right near the 30 and 90-day highs. Now, consider, for example, the Russell 2000 closes at a daily and 5-day low, diverging from other stock indices and long-term trends. This is what it looks like. Notice on a daily range, the Russell 2000 closed right on the low of the day. Over the past 5 trading days, the Russell 2000 closed almost on the low of those 5 days. Conversely, we see the Dow Jones Industrial Average again close around 68% up in its daily range, as well as a 5-day range. It closed 82% of its 5-day range. So the Russell 2000 certainly did diverge and close at the lower end of its ranges on a short-term basis, where the other market indices did not. And this also bucks the trend from the long-term trend, which shows us the Russell 2000 was very, very strong on a 30 and 90-day basis. What does this mean? Well, the Russell 2000 is primarily made up of small cap stocks. Small cap stocks tend to do very well when the market's strong. However, when the market starts to weaken, traders and investors will usually sell the small cap stocks first. In other words, the small cap stocks tend to lead the markets. We can see here, for example, this is the Dow Jones Industrial Average. This is the past 5 days. Over the past 5 trading days, we can see the Dow Jones Industrial Average. The red line represents the low of the past 5 days. The blue line represents the high. Well, we can see the Dow Jones Industrial Average closed right off the high of its 5-day range. Conversely, the Russell 2000 closed right at the low of its 5-day range. So you really can see the divergence between a rather strong Dow Jones Industrial Average that's comprised of the 30 largest stocks like Disney and Boeing, as opposed to the small cap stocks, which really sold off towards the end of the week. We can also examine the strongest sectors within the S&P 500, and these are the home builders, the metals and mining, and the internet stocks. Compare and contrast those to the weaker stocks, which we'll see in just a moment. Here's the XHB, XME, XWeb. And we can see on a 90-day performance, these are the strongest stocks. Now, these are the weakest. Energy sector, XLE, oil and gas exploration and production, XOP, oil and gas equipment and services, XES. We can notice a similarity. The weakest sectors are all dominated by energy and or oil and gas. So we can see certainly there is a trend. Now, the reason why we mention this and the way we can use this information is, let's say, for example, we want to readjust in 2024 for the new year. We want to readjust our portfolio. Well, if we're long stocks, we certainly want to go long the stocks that we think are trending to the upside. Short-term traders are looking for trends. Conversely, if we're looking at the weak stocks and we expect a reversal, we'd want to identify those. Also, if we expect the market to sell off next year, well, certainly we'd want to sell short the stocks that seem to be going down the most so far. Here's a 90-day performance: XCS, XLE, XOP, oil and gas and energy stocks really bucking the trend. Almost all the other stocks in the 90-day performance basis have been going up, except for the energy stocks. So please visit us at our Twitter channel, Just the Data, where we post on a daily basis new trading and market ideas. And we'll be sure to update this also with more markets as time goes on as well. We hope this has been helpful. We look forward to seeing you back soon.